Hello, everyone. So the day trading video I posted the other day generated a lot of interest, but it also generated a lot of questions because I was talking about my strategy for trading ETFs with VWAP and the EMA 9. But I was just throwing out acronyms and concepts, and I wasn't explaining anything, because it was meant for people who have some familiarity with day trading. But given all the questions that I received, I decided it inspired me to do a series of videos that kind of explain the core concept of day trading, or at least as I utilize them. And I wanted to start talking about an indicator that is used by just about every trader out there, big or small, and that's VWAP or VWAP if you're nasty. Stands for volume weighted average price, VWAP. And basically what that is, the calculations are kind of complex that go into creating that pretty purple line that you see on my graph. But the simplistic explanation is that it is the average price for that particular stock at that given time, weighted by the amount of volume that a certain price or price rate range has. So if a lot more people are paying at a certain price, that price gets weighted more heavily. This is to be contrasted with, say, a moving average, which is not really taking volume into it. So it's just kind of providing those average prices, over a certain period. But we'll talk about EMAs in the future. So VWAP is really, really important because, again, it's used by big traders and little traders alike. It becomes, because it is essentially the average price, it's seen as, in volume weighted, it's seen as kind of like the safe price, meaning that it becomes a place of support or a place of resistance when a stock price kind of bounces or challenges it. But it's very much that dynamic support and resistance. So we'll talk more about those concepts in future videos. So I don't want to get too deep into that right now. But how the big traders are using it, the institutional traders, they're seeing that VWAP as what is the average price, and they want a good price. They're going to be buying thousands and thousands of shares of a stock. They want to be buying it when it's as far under VWAP as they can get. And if it's above VWAP, that's not a good price. So they don't care. They're going to try to avoid that if possible. They want to get a good price for their stock. Now, that plays into how the price throughout the day will react to VWAP. But as a day trader, as just a retail small-time day trader, we're mostly seeing VWAP as, again, that dynamic support and resistance level, but also it's kind of the safe point that a stock will kind of, because it's average price, just by that very, very notion, the price is going to kind of go throughout a day. It may go, depending on the stock, it may kind of do this, or it may be bigger, but it's going to be hovering around. It's going to be constantly moving away from VWAP and returning to it. So up and down, but always on some scale, vacillating between, over and under that price. So we can use that to our advantage to figure out what is a good place to buy a stock and ultimately what is a good place to sell it to. So two major strategies come up. Broadly speaking, again, we're talking about, this can get very, very, very complicated, but speaking very simplistically, because that price is going up and down over it, essentially kind of like spiraling around VWAP, the price here is eventually going to come back. At some point, it's going to come back down to VWAP. Now, what it does at VWAP is the two strategies we're talking about. So if it's either going to do one of two things, it's either going to hit this VWAP and it's going to be a place of resistance and the price is going to bounce off of it. Or it's not going to be the VWAP's not going to provide that safe landing point and it's going to crash right through. So you have the VWAP bounce or the VWAP crossover. And usually if a crossover, it's going to be heading down. So what does that ultimately mean and how do we utilize that? Okay, so it's generally believed that if a stock is going up and it comes down and bounces and finds that resistance, it's going to continue staying above VWAP for the entire day. So you can go very, very long with these trades. I'm going to be talking about utilizing a stop loss and a take profit, which are predefined places to take profits. So some people, though, will just stay in it. They'll assume it's going to be above, or in the case of shorting, below VWAP. But let's not get too deep into that. Honestly, same thing with a crossover. If a stock finally does cross over and it crosses over with a huge amount of momentum, which is the key here, then it's probably going to stay underneath for the rest of the day. But again, we can get more deeply into that concept later. The important takeaway is that the price is coming back to VWAP. It's going to do one or two things. Those are the only options. It's either going to bounce off or it's going to push through. Now, what it does and how you know where it's going to go or likely is going to go is taking a look at the volume down here. So looking at VWAP and volume are the two of the only indicators you really need. Like sometimes I have a strategy that also uses EMA 9, so I can get a better sense of where things are going momentum-wise. But you can get away with just having those two indicators. That's it. And once you get used to trading, you'll see that price action in real time, and you'll see that volume change in real time and get a real feel for it. But basically, how we're utilizing volume in this instance is if we see the price coming back down to VWAP, we know it's going to do one of two things. It's going to bounce off or it's going to go through. What it does is going to be all about what's happening in volume. We see this increasing sell-off, this red, and that's indicate the crash down towards VWAP. But what it does in that next time period, depending on what you're using, in this case, this is a 3-minute chart, is going to show you, indicate to you if it's a bounce or crossover. If that next line is a big red volume bar, that means it's crashed through. And it's probably safe that it's going to continue. If you're really cautious, you can wait to see if it bounces back up off of VWAP and keeps going down. Again, that's a complex strategy. We're not covering that today. Let's just talk about the crossover or the bounce. But if it's green, like it shows here, see how that third one is bigger and greener? It's bouncing off. And that means it's found a level of support at VWAP, and you know it's a bounce. It's not going to immediately crash through. Okay, so what do we do with that? That's great. So at that point, we see how things are developing. We're looking at the price action. We're looking at the increase in volume. We're seeing it's a positive buying. That means there's confidence in buyers that the price is going to stay above VWAP. So what you do is you take advantage that it's touching VWAP or it's close to VWAP, and you're gonna buy some shares. So you're gonna buy shares at probably you've waited a little bit, and you're gonna get in here. Now this is where stop losses and take profits are important. Always have that range. Whenever you put in a buy in Thinkorswim, I actually have a predefined template that whenever I buy stock, it puts in that take profit and stop loss. So the stop loss is automatically set some price that you're going to sell to avoid further loss. So if it looks like a bounce that is wrong and it starts heading down, you'll be able to save yourself because you'll know how much the maximum amount of money you can lose. So that's what a stop loss is. So we're going to just say in my case, I might do a 150 above to 50 cents below. So let's say that's 50 cents below. My take profit will be 150 above. So 3 times more than my stop loss. So that's a 3-to-1 reward risk ratio. And we'll talk more about that in the future. I want to keep these videos relatively quick. So what that means is as soon as I see it to bounce, I'm going to go in for a long position, which means I'm buying the stock and intending for it to go up and sell it when it's higher. So I do, and I wait. And eventually, if it hits this, that automatically sells. That's my take profit. Automatically sells. Bang, I've made some money. If it somehow turns against me and and it crashes down, like the market totally fooled me, it can happen, but I'm only out a small amount, 1/3 what I would have made. So the next time this comes down to VWAP, I look again. If I think it's going to be another bounce, I enter the same way. And if that time I'm right, then I've made 3 times as much money as I just lost. So that's how you remain profitable. It's important to control your loss in that regard. So always have a stop loss. And I say always have a take profit too. So like some people will try to get on a bounce and wait, assuming you'll stay above VWAP all day, but you don't know that's going to happen. Bad news could come out. Something could happen. Elon Musk could say something dumb on Twitter, and whatever stock you're following could suddenly crash. So don't wait too long. Get in, get out. If you're a day trader, just get in, get out with a profit, go on with your life. With any luck, you're doing this before noon, ideally always before noon. That's one of my rules we'll talk about in a future video. But take your profit, get out of there. And just real quick, let's talk about what it looks like if it pushes through. So imagine this line right here has continued down. So as I see it continue down, I'm probably buying somewhere in here. My stop loss, I'm shorting now because it's going down. I'm expecting it to continue to go down because it's busting through. So I put a stop loss 50 cents above and now $1.50 below, for example. So I just need it to crash down to this point. I sell, I make profit. Bing, bang, boom. And again, if I'm wrong and this is a bounce that is bouncing just because again, a bounce can happen not explicitly on VWAP. It could be bouncing a little bit below VWAP. If it ends up I'm wrong and it bounces back up, all right, so I've lost a little bit, but no big deal. I had a stop loss. But again, you're looking at this volume and watching how the price is developing. You know, if you're using candles or Hikinashi or whatever you're using for your chart style, whatever you're used to, take a look at that price action. You can see where it's going. You can look into the minds and souls of other traders and figure out what's going on. So that is the general idea of what VWAP is and how you trade with it, with the two major strategies of it crossing over VWAP or it bouncing off. And this can happen in a shorting position too. Right here, you see it being above in long position, but the same thing can happen under this, bouncing off the bottom or busting through. So it can happen in the reverse way too, but let's, for another video. Basically the same thing, but you're selling instead of buying. But in any case, that's all I want to say. This video is about 11 minutes. Not too bad. I was hoping it would be shorter. But if you found this video helpful, I'd really appreciate you give this video a thumbs up. My other video was mostly successful because you guys were so cool and interactive with it. Lots of thumbs up and lots of questions in the comments. So if you got questions, drop them in the comments. If you found my channel because of day trading, subscribe so I know that you like these sort of videos. I've been doing this only for 2 years. I'm not an expert, but I'm happy to share what I've learned that will hopefully realistic stuff that will hopefully serve you well in your own hobby day trading. But in any case, thanks so much for watching. And as always, thank you for joining me on this hopefully very profitable journey.